What's up, YouTube? Today's video is brought to you by CASA, Court-Appointed Special Advocates for Children of Kent County. Listen, guys, this is a great organization, and when I'm not in front of you all, I spend a lot of my time mentoring fatherless youth as well as foster youth. Guys, I need you to take some time to view this clip, and then after it's over, we'll get right to the video.
I had to pack up all my things. I had to leave my home. And I never knew where I was going next. It felt like I never even had a say. But then you came along.
Change a child's story. There's a child in foster care waiting for a volunteer like you.
Make a difference. Volunteer at CASA of Kent County today.
If you're new here, I make videos about personal finance and how to invest and build wealth through the stock market. I started this Robinhood challenge for two reasons. Number one, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number two, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate you. Today, guys, our video was about a Workhorse update. You guys know I first put you onto this stock many weeks ago, well before it has done as great as it's done. However, it is now sitting at $15 and it's time for us to talk. So without further ado, let's open the free stock today and let's take a look at my portfolio. Okay, guys, as you can see, my portfolio is currently sitting at $37,230.80 on the day. Not really much to write home about. On the week, we are down 1%. On the month, we are up over 8%. If I take you guys 3 months out, we are up over 12.5%. If we go 1 year out, even though I haven't had this portfolio for 1 year, I only had it since January, we are up 11%. And if we go all time, we are up over 11% as well. Listen, guys, we're going to open up a free stock today, and this one comes from Tamara. Tamara, I want to thank you in advance. You guys already know how this goes. When you use my free link, you get a free stock and I get a free stock, and it's a win-win for both of us. So I want to continue to encourage you guys to use the link. There's nothing better than free money, especially when you're trying to build your portfolio out. We have Heckler Mining Company for one share, $5.51. And so again, guys, keep it coming. Don't hesitate to use the free link. Listen, guys, today I want to talk to you very briefly about Workhorse. Right now, it is currently sitting at $15. Matter of fact, let's be specific. It is sitting at $15.73, ticker symbol WKHS. Listen, man, I have been keeping my eye on this company because out of all of our spec plays, I like Neo the best. I like a couple other ones as well, but Workhorse is also in there. And so today I wanted to kind of put this back on our radar because I believe, well, matter of fact, I know I did the research on this company already. Just to make a long story short for you guys, this stock will eventually hit around the $30 price point. It has a price target right now of $27 by some of the best analysts in the game. So listen, guys, that means that from this point, you have a chance to double your money. You should have already had your position somewhat established in this, because I've been told you about this stock back when it was under $9. And so with that being said, I need you guys to consider adding to your position, if you haven't already, in the 15 range. So right now it's at 1573. So if it drops to 1550, I need you to consider starting a position or adding to the position you may have already established, because if you have the patience, this stock has the potential to eventually reach $27 and around that $30 range. And so I wanted to bring that to you guys today, just to make sure that I'm keeping you invested in the right type of companies that's going to grow the right way and grow your investment portfolio along the journey. So listen, guys, there's been a lot of great news, whether it's Kathy Woods from ARK Invest. They've been added to their portfolio. They're constantly picking up momentum as more and more people begin to know who they are. They begin to be on more people's radars, and so that all spells well for this type of spec play. But again, it's all about you getting your position established on the front end so that you're not having a fear of missing out, or that you're not riding a wave when it's going up when you could have got it at a very, very good position. Okay, so listen, man, I wanted to make sure that I brought that to you guys today. Let me know if you have shares of this already in the comments below, as well as let me know how many shares you have, and as well as your average cost. Up next, guys, we have our word of the day, and our word of the day is PE ratio. Yesterday I talked to you guys about a market cap. Today I want to talk to you guys about a PE ratio, what it is and why it's significant. And so, as you know, I'm going to give you guys a visual so that you can see exactly what I'm talking about, and we're going to pick a random stock to do that with on today. But what a PE ratio is, guys, is a price to earnings ratio. That's what the P and the E mean, price to earnings. Okay, and it is known as the ratio of share price to the company's earning per share. So this ratio is used for valuing companies and to find out whether or not they're overvalued or undervalued. So a lot of us investors, when you guys get to understanding how a PE ratio works, you can look at that alone and know if it's overvalued or undervalued. There's a range that I want you guys to be mindful of. And so let's go ahead and pull up just a random stock. I don't care what it is today. We're gonna go with Facebook just to be safe. And let's see, can I just break down for you guys in real time how this goes. And so scroll down with me. Put your eyes on the PE ratio. So as you see, Facebook PE ratio is 31.61. Okay, that means it's 31 times its earnings. So that means Facebook is valued 31 times the price that it's currently at. You have to determine for yourself if that's too much to pay for a stock that's currently sitting at $234. So check this out, guys. The range that you want to stick between is if a company is 25 and between 25 and 20, or 20 to 25 range, that's pretty, you're getting pretty high, but you're in a good spot and you're not overvalued just yet. Once a company PE ratio hits over 25, so 26 to 31, it is safe to say to some degree it might be overvalued. Okay, any stock that is between 10 and 15 is perfectly priced. Okay, so when you, now that I told you guys this, when you start picking companies that you want to invest in, peek at the PE ratio, peek at the market cap, then you will know whether or not a stock is undervalued or overvalued, and if you're getting the best bang for your buck. 10 to 15 is kind of where you want to be, but it's even better if you can get between 10 and 5. Okay, and if a company is between 5 and 0 or 0 and 5, then it may be undervalued. But listen, start paying attention to that now that I put this on you, and then pick your stocks according to what the PE ratio is, because now I'm teaching you guys the fundamentals of how to invest and the real metrics that matter when investing for the future. Next up, we have our question of the day, and today's question comes from Brandon Wayman. He said, can you explain market cap and how it factors into picking an investment? I noticed Walmart's market cap isn't as big as some tech stocks, but Walmart is huge. That's a great question, Brandon. I'm glad you brought this up so I can double back and touch on this point and hammer it home a little bit more. Guys, I talked to you in yesterday's video about market cap. And market cap is essentially how much a company is worth. And so all of its assets, everything it owns, you minus that against its liabilities, its cash flow, its revenue, all of that combined is how you come up with the market cap of a company. On the flip side, a market cap is also what another company would have to pay if they were to acquire a company like a Walmart. Okay, and so I think they were 371 billion. Okay, that's how much Amazon or whoever would need to pay if they wanted to acquire a company like Walmart, because it's so huge. But that's simply all that a market cap is, guys, is how much the company is worth, how much it is priced at, how much it would sell for if it was on the open market. So keep that in mind. I think these are great tools. I think these are great words we're discussing, because as you get to learn these, the stock market will really start to begin to make more sense. You'll know if a company has money. You'll know if they have a good worth. You'll know if they aren't really bringing in that much money based off the market cap alone. And so, guys, we study going deeper and deeper, and I love it. Keep the questions coming, keep the comments coming, and I'll be sure to answer them in the most relatable and relevant way possible. Listen guys, don't hesitate to leave me a comment below. I'll grab it and add it in my next video. Listen, I make videos like this every week, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll see you in the next one.